social inequality, widespread poverty, charities were huge in Victorian times, and guess what? They're coming back into fashion. These days, it's called the third sector. It performs a major role along with government in business. Peter Grant is lecturer in voluntary sector management here in Cass Business School, and he says that the voluntary sector should be forced to spend more money on good causes. I asked him first of all just to tell me what the difference was between charitable foundations, his target, and charities.
Well, in a sense, nothing. I mean, both of them have charitable objects and must pursue those. Both of them have trustees. The difference with what we tend to call foundations are that they do their work through others. They give money or resources to other organisations, and they're the ones that do the work. So they're more or less ones that we call grant-making foundations, though these days many of them go beyond grant-making. They make loans. Some of them even sort of enter into semi-contracts with other charities. But basically they're ones that do the work through other organisations. In other countries, some other countries, there are separate regimes that govern these two sorts of bodies. In this country, there is no separate legislation for grant-making foundations.
Charitable foundations, though, tend to be funded by businesses, and there aren't an awful lot of businesses with spare cash at the moment. Isn't this going to be the fatal flaw of the third sector, of the voluntary sector? When it's needed at times like this, funds are simply going to dry up.
Hence one of the reasons for us writing the paper, that paradoxically you've got this issue that when times are tougher, interest rates are lower, those foundations that have an endowment, i.e. a permanent asset to give away, their resources go down. As you say, those foundations that are linked to companies, their assets go down as well. A couple of examples. I mean, the Lloyds TSB Foundation has set in the governing documents of Lloyds TSB Bank the fact that 5%, or I think it's 5%, of pre-tax profits have to go to their foundation. Last year, they didn't have any pre-tax profits. Hence, they're not going to get any money put into the foundation this year.
So where's the money going to come from then?
Basically, unless the bank decides to make a donation this year, they have to rely on the assets that they've built up over the years, or until it goes back into profit. Another example, foundation that I'm doing some work for at the moment, is the Nationwide Foundation, the foundation of the Nationwide Building Society. They've taken a decision, a relatively brave decision, that they are going to keep up the payment level to their foundation, despite the fact that this year they're going to have significantly reduced, if not no profits at all. So there is this paradox that at the time that charities need the money most, foundations, and indeed public funding, goes down. What are some of the things that we can do about that? Well, one of the things that we're saying is you can make more effective use of the money that you've got and that you're giving away anyway. And the second one is, should we look at the possibility of a minimum payout by endowed foundations to charities based on their assets, not on their income. It's what happens in the US and Canada, for example. In the US, foundations have to give away 5% of their total assets every year, and it doesn't matter whether interest rates are above that or below it. There are lots of problems with that, and it's quite complex, but it is one of the things that we think that there should be more research on, and that's what we're going to do.
But some charitable foundations might argue that they're there in perpetuity, but if they're forced to give away money, then ultimately they're going to disappear.
It's one of the points that they make. Therefore, I mean, one of the things we're saying is that as endowed foundations that are there forever, they need to take the long-term view. And most of the foundations that I've had dealings with, and most of the major foundations in this country, are doing exactly that. The interesting thing is that though the assets of major foundations, at least, have gone down probably somewhere between 20 and 25% in the past year, their grant-making hasn't gone down. And that's mainly because they are taking that long-term view. Though their assets have dropped, they've dropped not so significantly that they think that this will have a long-term detrimental impact on their asset base. They believe that they will recover. And so therefore, rather than dropping their grant making very significantly, they're keeping it up this year on the basis that they believe that they can make up that money in future years.
Here's a question you're not going to like. Why should businesses be giving money to charity anyway? Surely their responsibility is to their shareholders.
Yes, if their business is absolutely true. However, I think that the recent crisis in the banking industry, on top of everything else that's happened, all the scandals that we've had over the last few years, Enron and everything else, demonstrates that those businesses that ignore their social responsibility are actually ones that either are badly run or are soon going to lose their customer base. I think we're getting, consumers of business products are getting more sophisticated. They don't simply want to see businesses growing their finances to the detriment of society.
Well, that might be true for some businesses, businesses with a socially responsible customer base, but there are many other businesses whose customers, rather than knowing that the company's giving money to charity, would just prefer cheaper prices.
They might do. However, I think that there are two things here. Firstly, those businesses that are only in it for business, why do they give to charity in the first place? Well, if they give to charity, I think that demonstrates that they've got some sort of social responsibility, and therefore they want to try to do it in a better way, improving their socially responsible giving. Secondly, you've got those organisations that are established precisely for giving to charity, and they're the ones that we're really talking about in the paper. We're talking about foundations established for the purpose of giving money to charity. Now, how do they operate in such a way as to firstly be more effective, and secondly to avoid dramatic ups and downs in their giving rates at a time when interest rates fluctuate wildly or indeed businesses collapse?
So if they were forced to give 5% of their assets away every year, just what sort of difference would that make?
You can't actually say exactly, because of course what happens is that giving fluctuates. But in, as it were, the worst case scenario where interest rates are very high and giving can't keep up with that, it could add several £billion a year to the amount of money given away. And one of the things that we want to look at in further research is to look at things over a very long period. Can we go back 20 years to look at the increase in value, in real value, not gross value, of endowed foundations' assets, and say whether that has grown or shrunk over that period? Our initial view is that it's significantly increased, whereas giving has not kept pace with that. That's certainly been the findings in America. And so we do think that there is room for greater giving from the whole range of endowed foundations.
One last question. Aren't charities actually quite an easy opt-out for governments? They fund things that really government should be funding.
The unique thing about endowed foundations is exactly what you said. They're there for perpetuity. So they should be able to take a much longer term view than a government, which is only going to be in power for 4 or 5 years. And they're possibly at the moment not fulfilling their potential as organisations that could fund things on a 20, 30-year basis. A few years ago, there was a survey of what people in the charity area thought was the biggest achievement of grant making in UK history. And by far and away, the winner was the abolition of the slave trade, which for 30 years was funded mainly by private individuals and charitable trusts. Now, that wouldn't ever have happened if they hadn't stuck with it for 30 years. At the start, in the mid 18th century, people laughed at the idea that the slave trade would be abolished. Too many business interests there that would be damaged, and yet it was achieved. And that's the sort of thing that you actually, if you fund it for 20 or 30 years, you can make major social changes. That's where foundations can be really effective.
Peter Grant, thank you.